Thanks for being with us, Brett. I know you're looking at some of the ESG funds, investing in that. It became so very popular so quickly. So on a broader base, explain what it is and why the popularity soared the way it did.
Yeah, certainly. Believe there's about 7 trillion in assets already towards this ESG movement, about a 300% increase from 2019. And we actually prefer to call it impact investing here at Gerber Kawasaki because we don't believe that the traditional ESG screen necessarily accounts for all the companies that are making a great societal impact.
So when you talk about ESG, I mean, you're talking about everything from the environment, how things are run socially, the governance, all of those things, right? So which ones are you following? Because the idea here is if the company is doing things in the right way, right? Best way for their employees, best way for the environment, those types of things, that will bring good things going forward, though sometimes it costs more. What are some of the ones that you follow most closely?
Yeah, so it's certainly believed that if a company has these values, that'll ultimately fall to the bottom line. Some of the companies that we do love in this space, like Tesla, for example, are huge contributors to basically making the world just a better place in general, right? Getting us off these dinosaur juices that a lot of people call fossil fuels and creating an industry and a movement that can just make the world a better place at the end of the day.
So are there ETFs for this? Because environmental would mean, ESG, environmental waste and pollution, climate change, deforestation. Social is the S part, conflict, diversity, health and safety, working conditions, and governance is the last part of ESG, tax strategy, donations, watching corruption and bribery, diversity. Those are the types of things that go into the third part of ESG. Do you have certain stocks or funds, ETFs, that you recommend?
Yeah, so I'd say, 3 of our favorite investments in the space, one being Tesla that I just mentioned, but another is Google. They've taken a lot of steps to reduce their complete carbon footprint by 2025. And another is NextEra Energy. It's one of the largest alternative energy producers in the world. All 3 of these companies are doing amazing things for the space and amazing things for our society every day. And really, it's just an extension of the Gerber Kawasaki values is, these companies that we do invest in.
Right. And with NextEra Energy, it's interesting to get into an energy name. What is NextEra Energy doing right?
Yeah, so they've been into move into markets that no one could before and basically just lower their cost. So they're able to basically produce energy in ways that has not been seen before. And they've been basically rewarded for it along the way. I mean, it commands a very high valuation at this point compared to most of its peers, but that's because they've been able to outperform them so significantly.
Right. So that ticker's NEE, right, for NextEra?
Yes, NEE.
I know you guys have been hot on Tesla. Do you have a Tesla thought on where the stock is at this point ahead of the 5-for-1 stock split?
Look, I mean, Tesla and also Apple really had these great runs, due to the stock split, not necessarily saying that that's a reason for it to continue going up. But there's a lot of things to be excited about Tesla. We got upcoming battery day as well as a lot of other metrics, including the Cybertruck and tons of things down the line. So we're still really excited about the company. Obviously, the valuation at this point has grown significantly. It's something we still like, but we want to make sure that we're, obviously doing the right thing here and managing money that's, prudent for our clients here.
Brett, great to see you. Brett Sifling, investment advisor, representative at Gerber Kawasaki. Thanks for being here with us, Brett.